Should you pay off your mortgage before you retire? It's a goal for many, but it's not a one-size-fits-all answer. Hey everyone, Gabe Galanti here, fiduciary financial advisor, CEO, and owner of Rockline Wealth Management. Over the last 12 years, I've had the opportunity to work with hundreds of families on their retirement planning. And a lot of times we come across the question of whether or not someone should or shouldn't pay off their mortgage before retirement. So today, I want to talk to you about some of the pros and cons, as well as some of the mixed strategies that I've seen over time. And be sure to listen to the end, where I'm going to share an insight which I think might be a game changer for those of you trying to come up with an answer to this predicament. First things first, I'd like to address some of the top reasons that I hear pre-retirees might be motivated to pay off their mortgage before they retire. The first situation is just simply freeing up cash flow. Paying that mortgage off to free up an extra couple of hundred, up to a couple of $1,000s a month could be a game changer in retirement. This money can be used for anything you want. You might want to put it towards discretionary expenses like travel and hobbies, or you might just want to save a little more. The second reason is peace of mind. Knowing that you own your property outright and you do not owe a bank or lender any additional monies. After hearing these situations from clients, it's then up to me to try to figure out what makes the most sense and what is in a client's best interest. With that, I want to share how my mind navigates these problems. The first question I ask, very simply, is what is the rate that you're paying on the mortgage? For the purposes of this example, let's use the number of 7%. So if you're paying the mortgage and your rate is 7%, and you take a hunk of money to pay down the mortgage in full, you're effectively earning a 7% return on your money. If this is comforting to you, it may make sense. Another reason it may make sense is if you have a variable rate mortgage and you think that interest rates are going to move higher over time. Paying the mortgage off prior to seeing those rates move higher could help you save money in the long haul, which you could use again on things that you enjoy. Although you might be sitting here right now thinking, wow, that makes a lot of sense. Maybe I should pay my mortgage off. I ask that you listen just a little while longer to see some of the scenarios where it might not make so much sense. Something I always speak to clients about, depending on their level of risk, is how comfortable they are as far as their cash reserves are concerned. When budgeting in a simple manner, you might say that it's common practice to keep at least 6 months in cash reserves. Working further with planning on our clients, we do find sometimes that there are some clients which prefer to keep much more cash on hand than that, and others that feel that the liquidity provided by their investment accounts is more than enough for them. I start my point by explaining that in theory, although you might feel more comfortable in thinking that paying off the mortgage in full is a great idea, when doing so, you might adversely affect your overall cash reserve, which could bring about additional fears. Having all your money tied up in the equity of your house might not allow you to feel as comfortable as having all of that money liquid in the bank. Another reason that you might not want to accelerate paying down your mortgage has to do more so with investments and retirement. As we discussed prior, something to take into consideration is the rate of interest that you're paying on the mortgage versus the potential rate of interest that you're earning on your money. For example, let's say we're in a very low interest rate environment and you have a mortgage locked in at 2.5%. If you have assets that are invested that are earning dramatically more than that, then it may make sense to continue investing. There are a few factors to take into consideration with a situation like this, including calculating the after-tax return on your investments, as well as the deductibility of your mortgage. And for that reason, I'm going to recommend that you speak to your accountant. With regards to retirement, if you find that you have excess cash flow at the end of every month, it might make sense to increase your retirement account contribution, providing you're allowed to do so. Quick note to remember, for those of you over the age of 50 contributing to a retirement account, you can actually pack away more via the catch-up contribution. Now, aside from saying, should I pay it down all at once or should I not, we do have situations where you might come across different strategies that you could use right down the middle. I've personally seen a few different methods used as a combination to accelerate payments to the mortgage, as well as continuing to invest money down the road. Strategies such as increasing the amount of payments you're putting towards the mortgage, or even increasing the amount per payment, can help you pay down the mortgage faster. Also, remaining disciplined and understanding that that's your goal, using any additional sporadic monies that you might come across over time to pay down that balance. As I mentioned earlier, I do want to share an insight with you that I find can be crucial in trying to make this decision. The biggest overarching factor to keep in mind here, as far as this situation is concerned, is that everything is dynamic or constantly moving. There's not one perfect answer, so don't get down on yourself for not being able to decide which situation might be best for you. There are factors which would be considered quantitative, like the rate of interest you're paying on the mortgage versus the rate of return you're receiving on your investments, or factors that are qualitative, like how much you value feeling that liquidity in your bank account versus keeping all of your money packed away inside the equity of your home. Working through this process may be a bit time consuming, but it can absolutely have an impact when coming up with your overall plan. In speaking about the impact of homes and mortgages, check out our video here on the impact of owning a second home in retirement. Thank you very much and have a great day.